I'm going to give you my biggest secrets on the fastest way to increase your credit score. The number one question that I'm always asked is, how can I increase my credit score fast? So I felt that this is a very important video that everyone needs to watch, because I'm going to teach you exactly what I have taught thousands of my clients and help them in succeeding in raising their credit score the fastest way possible. And on top of that, I'm going to teach you exactly how to take full control of your credit score so you don't feel like anyone is taking advantage of you. But you're probably sitting there saying, but what do you mean take advantage of me? Well, the problem here with credit is a lot of people think that it's the credit card companies, it's the banks, it's the actual credit reporting agencies that are holding my score down. They're not allowing me to actually grow. No, that's not the problem. The problem is actually you, because you don't actually fully understand how to take control of your credit score. And this is why this is going to be one of the most important videos you're ever going to watch about credit. You want to make sure that you watch this to the very end, because I'm going to focus on the most effective and powerful ways to increase your credit scores within 7 days. That's right, I said within 7 days. And I'm also going to show you the number one thing that destroys credit scores, and all of the tips and tricks and all the things that you need to know so you can be successful with continuously and consistently raising your credit score and watching it grow so you can achieve those financial goals that you're trying to achieve, whether it be buy a home, buy a car, get a new credit card, or just watch your credit score grow so you can be prepared for anything. But before we get into any of the major sauce, I need to give you a huge tip. There's a huge problem that I'm seeing out here in the credit repair industry. Now, what I'm seeing is a lot of credit repair companies that are amateurs, which is more than 98% of them, are bringing on people into credit repair programs that are in credit card debt. If you think that credit repair is the answer for credit card debt, no, you're not. Stop wasting your money on credit repair and focus on paying down your credit card debt before you do anything else, because you're literally working up against a machine. One, the credit reporting agencies and the credit bureaus, when you're trying to fix your credit, and you're spending money on something that's gonna take time. If you devote all of your energy and money into actually paying down your credit card debt, then you can devote all of your focus into rebuilding and making actual credit repair affordable. Whether you're using Dispute Beast or you're using another credit repair product, it has to be affordable. It has to make sense. I cannot stand the fact that people that are in financial binds will literally spend money on credit repair instead of spending the money to actually pay down their credit card debt. And then on top of that, if you pay down your credit card debt, you're debt free. Who doesn't want to be debt free? Because unfortunately, these amateur credit repair companies only see you as a number and someone that's paying a monthly fee. And that's just not cool, and it's not worth it for you to spend your hard-earned work money to actually pay for credit repair that may become ineffective. Because at the end of the day, a lot of these credit repair companies are using template letters that are going to get you nowhere. And this is why it's important. Create a plan to pay down your credit card debt, and then you have single-handedly taken control of your credit score without the help of a credit repair company. And again, like I said, why would you put your money towards credit repair instead of putting it towards your debt? And all of these amateur credit repair companies are not going to tell you that. It's the number one factor of why I would deny anybody to get into any of our credit repair programs when I did actually offer credit repair, because I couldn't sleep with myself and live with myself thinking like, hey, listen, like all these people are signed up, but like they can be paying down their credit card debt. I would literally tell people on consultation calls, listen, I want you to pay down your credit card debt. Doesn't matter what's going on anywhere else, pay down your credit card debt and then come back and then join the credit repair program, because now you're debt free and you can actually truly afford it. Because here's the biggest secret that they don't tell you. It's not just about it being affordable. Credit repair just can't be affordable. You have to actually afford to build new relationships with new credit unions. That's my secret sauce. That's for another video. But understanding that you can put that money towards building relationships with these massive actual credit unions, and they'll still give you massive lines of credit even with bad credit because you established a relationship properly. But these amateur credit repair companies don't know how to do that, even when I'm teaching it. Now remember, you can be more effective at raising your credit score by taking that money that you were going to put towards credit repair and paying down your debt. And when I say this, I'm referring to credit card debt. I'm not talking about your car loans, student loans, or any installment loans. Those installment loans don't matter. They are not start weighing down your credit score. Because think of it like this, you're not mentally there yet. Your focus is not on your finances. Your focus is on, oh, I gotta repair my credit so I can go buy a car, get into this house, but you're not financially sound yet. You need to be in a different mindset, and this is why it's important to attack that credit card debt first before you do any type of credit repair. Thank you for listening to me. Now let's jump into this sauce right here. So I need to go back to the basics to break down the 5 categories of credit so you can fully understand how to take control. Every single category is broken down, and every single category will get you a certain amount of allotted points. And of course, nobody tells you this because they just don't really understand credit or how the breakdown actually goes. But right here, we're gonna put this up on the screen so you see this. This is the chart. I want you to pause the video, screenshot this, send it to your friends, or send this whole video to your friends so they can see exactly how their credit score is calculated. These 5 categories make up your credit score: payment history, credit utilization, credit age, credit mix, inquiries, or otherwise known as new credit. This is what is going to make up your credit score, and each one of these give you a certain amount of allotted points. As you can see right here, payment history is going to get you 192.5 points. Don't get any late payments in the most recent 24 months. Anything that has a late payment in the most recent 24 months is high impact, and a late payment will hurt you all the way up to 7 years, but the most impact it has is the first 48 months. That can be the #1 reason why you get declined for anything whenever you apply, because you have a late payment. It's basically telling lenders like, you don't pay on time. Even if it wasn't your fault, even if you had a financial hardship that you had to go through, this is a major factor that you need to pay attention to. Never ever get a late payment. The utilization makes up 165 points of your credit score, always keeping your utilization below 9%. Now pay attention. Utilization is the actual balances that are being reported, not your credit card activity or how much of your credit card you're using. It is strictly the balances from your credit cards that are reporting, not any of your installment loans for your car loan, your student loans, any type of other installment loans you may have. None of that matters. This is only from your actual credit card balances that are reporting to the credit reporting agency every single month. Next up is your credit age, 82.5 points. Now this is what I talk about in other videos, that let your credit grow. Don't go applying for a bunch of credit cards. A lot of credit cards and a lot of credit accounts don't equal a higher credit score. You let it sit, you let it age, and watch your credit score grow. It's just that simple. Credit mix is 55 points. That is literally the different mix of credit that you have on your credit report. So you can have a mortgage, an auto loan, maybe 1, maybe 3 credit cards at max. Mixing up the actual mix of credit that you have on your credit profile will help you get some of those allotted points. I want to give a special shout out to all my beasters out there that signed up for Dispute Beast and are working hard to fix their credit using the most advanced DIY credit repair software ever created that anyone can use. If you need to fix your credit, link is gonna be in the description. And the final one is 55 points for hard inquiries, or otherwise known as new credit. Every time you apply for something, you get dinged. So when I hear someone say, I lost 50 points, bro, there's no way you lost 50 points with a hard inquiry, because 55 of those is all you get. So you're telling me you only have 5 points left in hard inquiries? Unless you applied for a shit ton of actual credit products out there, that really didn't happen. You're probably looking at your Credit Karma score, which that's exactly what we've talked about before. It doesn't matter. But if you haven't been paying attention to this chart, pay attention to those first 2 categories. Those 2 categories, credit utilization, otherwise the balances that are being reported from your credit cards, and payment history, make up 65% of your credit score. So if you can control those 2 factors right there, you have single-handedly taken control of your credit score, and then everything else, you just set it and forget it, and it just falls in line. As long as you're not applying for all types of credit cards that you truly don't need, apply for only the credit cards that matter. We want high limit credit cards on our credit profile, and I've talked about that in other videos, getting them through credit unions. Now let's pay attention to the first 2 categories, which is payment history and utilization. I'm gonna use 2 bank statements from 2 different credit cards to show you exactly how to properly pay your credit score so you can take 100% control of your credit score. First, I'm gonna put up a credit card statement for Capital One, and then I'm gonna put Discover up also so you can see the difference, because every statement is different from every single bank, but I want you to understand what you need to actually be looking for. So taking a look at the Capital One right here, you can see that there's a payment due date. Now remember, you only have a due date because you were carrying a balance previously from the previous month. Always make sure that you at least make the minimum payment, but understand something, that minimum payment is a trap. It is 100% a trap to make you seem like, oh, it's not a big deal. I'll just make the minimum payment and I can just keep doing that. But if you keep making the minimum payment, you'll wind up spending hundreds, possibly thousands thousands of dollars in interest by the time you actually pay off a balance on a credit card. Because remember, these credit card companies, the interest rate is how they make money, from interest rates and late fees. We don't want to give them any free money, so we want to pay it off in full every month if we can, or work towards paying it all the way down when we can. Now pay attention. Again, like I said, the due date, pretty standard. We all know what that looks like. But I want you to pay attention to the red square box, because right there you can see it says December 23rd is my actual opening date, and then the second date is our closing date. January 22nd is the closing date or / ending date. That's what we need to learn right there. Now see how there's a big gap right there from the February 16th to the 22nd. So people pay off their credit card by the due date and they're like, I paid off my credit card, but why is it reporting a balance? Well, that's because you used it in that gap of that time frame from your due date to your actual statement closing date. And that right there is a 6-day gap. Every credit card company is going to be different. It could be 15 days, 14 days, it could be 4 days between those dates. So you have to pay attention to that. If you need the credit card company to move your statement closing date, you can call them and request them to do that over the phone. And they're usually pretty flexible about doing that, unless you got a crappy credit card, then they really don't want to help. But again, our statement closing date is the 22nd. We want to make sure that we pay off the credit card 2 days before that date, because it generally takes 2 days for the actual payment to clear. But once your statement closing date hits and it actually is the 22nd, then you stop using the credit card completely. Don't use a credit card for up to a maximum of 7 days, because the credit card company has 3 to 7 days to report your balance to the credit reporting agency, and that's exactly how they control your utilization. Because remember, utilization is the balances that are being reported from your credit card, and the credit card company is going to report that balance, and that's exactly truly how you control your credit score. Make sure that you change your bell notification from mute to notified, so you never miss any of our new content that we drop or when I go live, because you just never know when I'm going to pop up and bring you some more valuable information for free. Because remember, that right there makes up 30% of your credit score, and then payment history makes up 35% of your credit score. So making sure you don't get any late payments and keeping that utilization as low as possible. 0 should always be the goal, so we never pay interest. That is you. Congratulations, you're taking control of your credit score. Now remember, I know you've probably seen this everywhere on social media, some big time financial guru saying you gotta leave a small balance on it so they can see that you're using your credit card. Guess what? They're wrong. And I'm gonna tell you exactly why. We're gonna prove that they're wrong, because pay attention to the categories. Let's put the chart up on the screen again. You only have 5 categories of credit. These categories make up your credit score: payment history, credit utilization, credit age, credit mix, and inquiry. Nowhere on there does it say activity or credit card activity. It doesn't state that. So it doesn't control your credit score. How much of your credit card you use doesn't matter. The only thing that matters is the balances that are reporting. So anyone that says that, I prove that they're wrong. But here's the big but. Even if you have a credit card, you must actually use it. It doesn't matter how much of your credit card that you use, but you have to use it, because if you don't use your credit card within 2 months or maybe 3 months, the credit card company may shut it off, because guess what? They're not making any money from you. You're not using it. The credit card company wants to see you using your credit card. They will literally shut the credit card off for no activity, lack of usage, and then your account will close, and then you have a bigger problem, because a closed account can have a negative impact on your credit profile. Now, I can't say that it's going to happen to everyone, but understand, anytime you close an account, it can have a negative impact on your credit report, because everyone's credit report is different. Remember, we talk about that all the time on this channel. So I can't say it's going to hurt you and then it's not going to hurt them. We don't know until it truly happens, because your credit report is completely different from mine and yours is different from theirs also. Now on to the biggest credit score hack of all. Should you carry a balance? Now, as usual, I'm always going to bring proof, because I want you to see for yourself truly how it affects your credit score anytime that you carry a balance. What balance really matters, and should you carry a balance? In my personal opinion, before I even show you this, understand, I believe that you should never ever carry a balance, because why would we carry a balance and pay interest and give the bank free money just so we can see our score go up? You should be doing everything else to maintain your score in a healthy position, and it shouldn't matter that you leave a balance. So anyone that tells you, no, you have to leave a balance, we just proved them wrong. But now I'm going to show you the facts. Now let's put my trusty little FICO chart up on the screen right here so I can show you with 100% proof that all these people are wrong. Pay attention to this chart. Now this is crazy. I went to this convention and they put this chart up and I'm like, save. And I believe that I'm I'm the only person out there out of thousands of people that were in the audience that actually saved this chart. And I think FICO is not letting anybody get a hold of this because they've seen these videos and they're like, this guy's telling everybody. Like, we don't want them to know that. But it's crazy to think that nobody saved this chart. So here it is right here. Pay attention to that. In that little square box, it says outstanding debt. So when these financial gurus and social media people are like, no, you got to report a balance, it literally tells you right there, outstanding debt. FICO breaks it down: payment history, outstanding debt, credit history. So we're going to focus on the balances that are reporting. Now pay attention. It says if you have no revolving trades, you're only going to get 30 points. So if you have no credit cards, you're only going to get allotted 30 points. You won't get the full spectrum of all the credits, all the points that we talked about earlier on the earlier chart. But if you carry 0% utilization, that means no balances, you will get a maximum of 55 points. Over time, you will build up to those 55 points, or you'll get the full 55. But pay attention, 1 to 6% can only get you 65 points at maximum. That's only a 10-point difference. But pay attention to the little asterisk right there. It tells you right there that the box number represents the maximum points possible. Now, minus the actual points that you have already received. So you could potentially have already gotten the 10 points, maybe gotten 3 points, 6 points, 7 points, 1 point, or no points. You may not get any of those 10 points, but it's minus those points. So that is crazy to think that you may not even get the 10 points, because remember, everyone's credit profile is different and how it's built and how it will we actually react. But this right here tells us that it's only a 10-point difference. It's not gonna make or break your credit score as people like to make it seem. But this right here, moving forward, this right here is the #1 credit score killer. When you get to 7%, between 7 to 19% utilization, you're only gonna get 50 points. Once you get between 20 to 49 points, you lose more points. You're only gonna get 45 points. That's pretty crazy. As you can see, the larger of the actual balances that you report, the more points you're going to lose. This right here is the #1 way to control your credit score. Understanding this process right here, paying your credit card and reporting as low as a balance as you possibly can, but 0 should always be the target goal. But listen, carrying balances is not the biggest problem. I know I tricked you there for a little bit, but understand the biggest problem that you're gonna see when you're working on your credit and you start to see your credit score grow, you start to get credit card offers, you start to get offers for auto loans, you start to get offers for mortgages, and then people say, oh man, I got a 680, I'm a 690, I'm a 700, let's go get a new credit card. Stop what you're doing, don't do it. Because remember, age of credit will fall in line. We need to let our actual credit score grow. We need to let our age of credit grow, because adding lines of credit, more credit cards that you don't need, is going to reduce your average age of credit, because your age of credit is based on your revolving lines of credit, all of your auto loans, and all of that put together, it gives you an average of your age of credit. The longer you leave them open and you don't add any credit to your credit profile, guess what? The higher your credit score grows. We have seen the numbers and the data to show us that people that have just a mortgage, an auto loan, and possibly another auto loan that they paid off, and then 1, maybe 3 credit cards, are the #1 people that are in the 800 club or at the perfect credit score of an 850. It's not necessary to have a lot of credit. It is not necessary to have debt to have a good credit score. So unlike our good Uncle Ramsey over here, Dave Ramsey, he likes to say that credit cards are the devil, credit's stupid, debt equals a higher credit score. It does not equal a higher credit score. You can carry no balances and owe nobody any money and have a high credit score. You can just have a mortgage loan on your actual credit report and some credit cards with no balances and have a high credit score. Imagine that. And before anyone comes in the comments and say, but Mike, you got a lot of credit cards. How you're telling us not to do something, but you do it. The only reason why I have this many credit cards is because I bring real data points so I can actually truly be able to talk about the credit cards that I'm either gonna say they're great or they're horrible or stay away from them. I've been through all of them because I want to bring you facts and real data points to know what you're getting yourself into with a specific credit card, specific credit union. That's the only reason why I have them. If not, I would maybe only have maybe 4, maybe 5 credit cards in my wallet, and that's it. And if you decide to get a new credit card, you have to make sure that it makes sense for your lifestyle, not my lifestyle, but your lifestyle, and you're actually gonna reap the benefits of getting this new credit card, reducing your average age of credit to build it back up, because you're like, you know what, I can keep this credit card in my wallet forever. This makes sense for what I want to accomplish, because I like credit card points, but you may like cash back, and there's nothing wrong with that. Always remember, it has to make sense for you, not me. Now, I'm gonna leave you with a final tip here. This is the final last straw on how to increase your credit score the fastest way possible. Now, if you have any aunts, uncles, friends, coworkers, people that you have a really close relationship with and they have good credit, you can be added on as an authorized user to their specific credit card. And the way you gotta actually sell it to your family member or friend is, listen, you don't have to give me a credit card. I'm never gonna have access to it. As a matter of fact, get it, shred it. I don't care about it. I don't need it. Because when they add you on as an authorized user, what's gonna happen is all of their payment history from that specific credit card is going to transfer to your credit profile from the moment they opened it to current date. Not with American Express cards. American Express cards do not do this. Remember this. Any other credit card will. You're gonna get all of the payment history from the open date until the current date. So if that's 10 years, that's 10 years of payment history that's instantaneously injected into your credit profile, which is amazing, because remember, payment history makes up 35% of your credit score. And then if they have a high limit on that credit card and they're not carrying a balance, remember, they cannot be carrying a crazy balance, because if they're carrying a balance, guess what? Now you carry a balance. You're not liable for it, but it's still going to show on your credit report. So if they have a $10,000 credit limit, guess what? Now you have a $10,000 credit limit that's reporting on your credit profile. So the secret with authorized user trade lines is the longer the age it's been open and the higher the limit. I have a special rule. I call it the 10-10 rule, or the 5-5 rule. It's been open for 5 years and has a $5,000 credit limit, or 10 years and a $10,000 credit limit. But here's the big but. If you have negative items on your credit profile, it may not be worth it for you to do it. Wait until you're almost done fixing your credit. That's what you really want to focus on, fixing your credit and then adding the trade lines. Because if you add trade lines to your credit profile while it's raggedy and then you go apply for something, guess what? They're gonna see the negative items and you're still gonna get declined. Some banks don't care, but a lot of banks can see there's an authorized user trade line on a credit profile, and that's the only thing keeping it up. And then they see all the dirty out there that you didn't want them to see, they're not gonna ignore it. And also understand, if you add an authorized user credit card account to your credit profile and you have negative items, your score is not gonna see the full potential that it would if you had no negative items. So as an example, if you add it to my credit profile, I might see a 100-point jump, but you add it to a bad credit profile, you may only see 30, maybe 50 points, as opposed to seeing the full spectrum of the full benefit of that authorized user account. Now, the big question is it worth it paying an actual trade line company? I say no, because that is a temporary thing. You're literally gonna pay for only a 30-day reporting, 60-day reporting, or 90-day reporting. And then after that 90-day ends, you have to pay again for it to continue to report. So this is not a long-term thing unless it's a friend or a family member, because until your friend or family member removes you, then it just stays on your credit profile. But the moment that authorized user trade line is removed, you lose all that payment history and you go back to where you were at. So that's why I say this is a temporary fix, unless you do it with like your wife or a really close family member that they don't care. They're just gonna keep you on there just for the fun of it. That's what I do for my family members that need help with their credit. I help boost their credit profiles after I help them tear it down and rebuild it and do all the good stuff. So I hope you enjoyed this video. We covered a huge one today on talking about how to increase your credit score. I gave you all the juicy sauce. Make sure that you watch the next video, because it is about Credit Karma and how they are the biggest scam in American history. Now, if you felt that I brought you some value in this video, make sure that you don't forget and subscribe to increase your credit score.